record. Okay, I'm now recording the meetup. All right. So futures, I'm going to switch over to a website where and show you that real quick. Let's see, in futures, research, futures products. All right, I'm going to change the share and I'm going to take you to the brokerage site and we're going to talk about futures for a little bit. Okay, you should be seeing the Street Smart Central platform right now from Schwab. Just so you know, for today, if you want to find out what a future is, how futures market works, all that type of fundamental stuff, that is not what we do. I do not talk about fundamental anything. You want to see the behind the scenes of how markets work, how an exchange works. That is general knowledge you can learn on your own, watching some webinars or reading an article on how futures work. Okay, so I don't talk about generic knowledge that you can gain any place you go for free on the internet or any place also read a book. I talk about specific strategies myself, Becky, have developed over the last 17 years and that we trade every day, every week, every year. That's what we focus on. It doesn't matter whether we're trading soybeans or lean hogs or the Nasdaq or gold or currencies, the euro, it doesn't really matter. All we need is an entry criteria, risk criteria, entry, target, and stop loss. How much dollar risk and what's our probability of success to reach our first profit objective. Doesn't matter what it is, we just need those things. Entry criteria, stop loss, the dollar risk, and the percentage probability that our first profit objective will be achieved. We do everything from the charts, not from TV, not from looks like, not like feels like. It is purely the charts, and it does not matter what it is or why it moves or what makes it move. That stuff is nice to know for your own personal knowledge, but has absolutely nothing to do with what I will show you and how we trade. All right, so if you're looking for fundamental knowledge, this is not it. This is about actually making money trading. All right. So now you should be seeing the website. Just want to show you real quick. This is the Schwab site, and these are all different types of futures you can trade. They have cryptocurrency futures now. They're not cheap to trade, but we're going to be talking today specifically about index futures, and in particular the S&P, Dow, Nasdaq, and Russell 2000. All right. Myself and Becky, futures used to be our #1 thing to trade. It was basically an ATM machine for us. And it was cha-ching. It worked. Everything we did really worked well. Then what happened in 2000, starting in 2008, margins started going up with that market decline and volatility. In order to trade one Nasdaq contract, we used to have to put up $2,000 to $3,000 in margin just to open the contract. Now, the margin to open one Nasdaq contract is over $20-something thousand. So if I scroll down here, this is the contract specs. I'm going to go to margin requirements. And so the margin for NQ, if I wanted to trade the NQ, the Nasdaq E-mini futures, I need $23,000 in my account just to open one contract. That's just money needed in the account just to actually place the trade. That's not even the risk. The risk is going to be huge. Basically, we're swing traders, not day traders, so we don't go for like 1 point, 2 point. We don't deal with that stuff. This is all swing trading on daily charts. So, but you need $23,000 just to open one contract on one trade. Think about multiple contracts, multiple trades. Basically, you need a massive account to trade the E-minis, and the margin started going up and up and up since 2008. So we've got margin out of the market. So that's why we had started trading Forex and options, because we just couldn't swing trade the index futures anymore or the currency futures. But what happened a couple of years ago, the exchange created micro futures. The micro futures are 1/10 the size of the E-minis. So where in the Nasdaq here, 1 point is going to be $20 and the margin is $23,000 just to open the contract. In the micro version, MNQ, it's literally 1/10 the size. So I need 2,000 something dollars to open one contract, and it's $2 a point. So what we did, we've basically fired up all the old future strategies we used to trade, and with a few extra years of knowledge, we fine-tuned them a little bit to make them even more profitable than they used to be when we were trading them previously. And we're back to futures as now one of our primary ways to generate income each month. And we love the futures. The big benefit of the futures over the options. Options are over, we trade over 84% winning trades. It's the same type of win percentage with the futures, except there's no time decay. There are no variables. There's no fluctuation. There's no bid-ask spread issues. It's just easier. And it's literally, they're literally 2 to 3 times as profitable as the option trade. So basically, in different words, I can make this in 1/3 as many trades. I can actually make 2 to 3 times as much money as I would trading options, 3 times as many options trades. So, and we're going to be going through actual dollar amounts in a spreadsheet a little bit later, so you can understand what kind of dollars and cents we're talking about and how the money adds up. If we trade in a business-like manner, not gambling, just execute everything in a business-like manner. So before we continue, I just want to ask, does anyone, is there anyone who does not understand a basic candlestick chart? Let me know, type it in, or also during this meetup, feel free to unmute and ask a question at any time. Okay, we want this to be as close to be in person as possible, so ask questions. Don't ever type stuff in. Don't raise your hand, I won't see it. So either type it in the chat or unmute and just go ahead and ask questions. But does anyone not understand a basic candlestick chart? Let me know and I'll go over it real quick. So we're going to try to keep it fairly at a level where everyone can understand, because there are some people I know on the meetup who are new to trading, so I'm not trying to try to make it too complicated. All right. Okay. Moving on then. Most of what we're going to be talking about, it will be on the chart. So feel free to ask questions. I'm going to switch back to the handout real quickly, and then we're going to go to the charts and take a look at stuff. Let me share. Okay, you should be seeing the handout now. And for those of you came in a little bit late, if you look in the chat window, you should see the link to where the handouts are at. So let's go to that link in the chat window. I'm going to send that again. So go to the chat window and the link is there. All right, I put into the handout the basic structure of a trading plan, which we use. It's the basic structure. In the detailed trading plan, there's going to be the settings for all the indicators in detail. There's going to be when to not trade. There are certain times we do not trade because technicals are off, usually around holidays, that type of thing. But we follow a setup, trigger, and trade management. This structure is learned from Jake Bernstein. So, and we like this structure for setup, trigger, and trade management. So we basically look for a setup that is visually what you look for. When you see that on a chart, now we have something to stop and look at. So we look for a setup, and most of our setups involve either 2 lines crossing or just a line going down, up, or up, down, a hook. And so most of our setups are like that. 2 lines crossing is what you're looking for, or a hook. And the trigger is usually just is something else to confirm that trade is good. And then the rest is trade management. Although we have like a sentence here for trade management, this is what I spend hours on working with people to understand the trade management. The setup and trigger are usually pretty straightforward. Trade management is what people have, so I have to show you how to do. I usually do that one-on-one in detail. I'll hold your hand for the brand new people. I'll hold your hand. I'll do it with you. I'll be online with you, sometimes in person with you, depending on where you live, and place the trades with you to make sure that all your order forms are filled out correctly, because the hardest thing to do when you're starting to trade anything new is how to fill the form out correctly. Nobody ever fills it out correctly, okay? And futures are no joke. They can put money in your pocket very quickly, or they can wipe out your account very quickly, and then you might even owe money. So when it comes to futures, this is a professional product. You don't mess around with futures unless you have been trained, you know what you're doing, and you are extra super cautious, okay? You double, triple check everything. You don't want to make mistakes on futures. But once you know what you're doing, I mean, these are the best ever to trade for consistent, very consistent monthly and annual profits. And I will, like I said, I'll be going through that a little bit later on. All right, so this is our basic setup, trigger, and trade management. Now I'm going to go to the chart. Keep this in mind as we go through it. You can read through it, the setup, trigger, and trade management, but we're going to go to the chart and then go over it. I'm going to go through the entry criteria. I'm going to go through, put some numbers in, show you profit and loss on the charts and how money is made. All right. Do we have any questions so far? Anything at all? Okay. So I'm going to switch over to the chart, and we're going to take some examples, and we're going to be looking at the E-mini S&P. All right. What you're looking at right now is a chart of the E-mini, it could be, well, the S&P futures. And we're going to go through a setup for this double D hook. All right. What's on the chart, this orange line and purple line are Donchian channels. Okay. They are different settings, different Donchians. The purple line is a longer term, and it's slower to respond. The orange line is faster. So the concept is, when we're looking for a long trade, we are looking for the orange line to pull back, which is the faster. So basically 2 different time frames we're looking at. This is the lower time frame, the orange line, and the purple is the higher time frame. There's a concept we learned when we were first trading, and we've seen it from many different people in many different forms. But the general concept is the lower time frame indicator pulls back below the higher time frame indicator, then snaps back into the higher time frame. The foundation will be the purple line and will be the indicator of trend. Also, this 40-period moving average, the dotted line is a 40-period moving average. And we have a squeeze indicator. We use all of them as trigger confirmations in different ways. But I'm going to go over the general concept today so you get it. Someone asked me the possible. I will have the recording available a little bit later. All right. So the market pulls back. The orange line pulls back under the purple line and then hooks up. So you see the orange line coming down. If you take a look at the data box there, you'll see the actual value. So right here. So you see the value of is 4104.38. Here is 4107, 4104, 4104.38, the same value, and then it increases in value, 4117. So from here for even, hook up, it increased in value. This, it came down, then hooked up, it increased in value. That's a hook. Orange line came down below the purple line. Decreased in value, decreased in value, decreased in value, hooked up. That would be our signal day we evaluate. Orange line came down below the purple line, hooked up right here. This would be the signal day we evaluate. Orange line came down below the purple line, hooked up. This is the day we evaluate. And this happens over and over again. Orange line comes down below the purple line, hooks up. This is what we evaluate. I'll do one more, just scrolling randomly. Orange line comes down below the purple line, hooks up. This is going to be a loss. I already know that because it's going to come down, stop you out. Next trade here. Orange line comes down below the purple line, hooks up. Good trade again. Just scrolling just like that. That was like 6, 7 wins and 1 loss, just like that. Okay. So I'm going to put some numbers to one of these hooks and to give you a feel for understanding how the numbers actually work and how money is actually made. But before we go on, do we have any questions on this general strategy concept? It's just basically the lower time frame pulls back, hooks up, and sort of snaps back into the higher time frame trend, using the Donchians as the foundation. Any questions? Okay. Like I said, for these charts, for the people I'm coaching, I will give you everything with all the values, all the charts already preset. You don't have to do anything on your own. I give it everything to you. And it's all set, the charts, and there's several charts we use and for several strategies. It'll all be pre-done for you. All right. So let's take a look at this trade right here. And Becky, can you also do some calculations for me if needed? Have your calculator ready? All right. Orange line pulls back and goes below the purple line. These are all indicators. For those people who don't like indicators, good luck, because that means you're just being subjective. And I know those people who are like, well, I want to do like price action. That's great, except it's not repeatable by 2 people. What one person sees is not what someone else sees, unless it's specific. So anything I do can be, if you ask 100 people to review it, 100 people will come up with the exact same conclusion. It has to be, anything we do has to be repeatable, verifiable, and be able to act on in a very business-like manner. Okay. Question, could you indicate which of the colored on left, colored bars on left mean pink? Okay. The pink line and the orange line are Donchian mean lines. Different values. The dotted line is the 40-period simple moving average. And everything is color coded on, so the dark blue here, this blue matches the color of the indicator. So if you look at the data box, all the colors match exactly what it shows on the chart. And the names are here, the SMA, the Donchian, the squeeze. So everything matches the colors that shows on the data box. Could you please indicate which of the colored bars on the left SMA mean pink and orange? Okay, so what hooks up is this orange line. So we're looking for the orange colored line to come down below the purple line and hook up. So if we look at the orange colored line here, the value is 4304.25. Then it comes down to 4297.13. And then the next day it increases from 4297.13 to 4297.75. That's the hookup right there. It went down, then increased in value to the orange line hooked up. Okay, so this is what we always, so we're following the orange line. This is what we're following. It has to come below the purple line, then hook up. So every hookup of this orange line is going to be evaluated for potential long trade. Okay. And the different scenarios with this, that's detailed in the detailed trading plan. But this is pretty much, this is basically it. It's going to be on the list. I'll show you a little bit later also. All right, so there's the hookup. Now, once we find a potential trade, I will tell you in advance that trading this strategy on the ES is about 93% winning trades. Okay, there's about 93% winning trades on the ES. So when we see this, we are trying to making our best effort to get into the trade. This is not day trading. When we're doing our analysis, it is just like you're seeing right now. There's nothing moving. We're looking at end of day chart to make our decisions. So the market closes at 2 p.m. Pacific time and reopens at 3 p.m. Pacific time. So we would be doing our analysis, looking for new trades each day after 2 p.m. Pacific. The best time is really between 2 p.m. and 5 p.m. Pacific time. That would be the best time to do your review. This way, the markets aren't really moving yet, so to speak, you know. It's not till after 5, 6 o'clock when Asian markets open, and later on Australian markets and European markets open. There's a lot more action going on. But between like 2 and 5, most of the world is not trading, so there's opportunity to do your review and get your trades placed. But everything is done after 2 p.m. Pacific time. Your data updates a little after 2 p.m., then you're ready to go. All right. So let me show you how this works now. I went through and got some numbers for this one example trade, so you can get a feel for what's involved and the amount of risk that's involved and how much dollars are needed to actually trade it and the percentage returns. All right, so this high on this day, so here I found a valid trade. The orange line came below the purple line, the orange line hooked up. That's my setup. And I have some other detailed things to confirm it with the 40 period SMA and the squeeze to confirm it and the different confirmations. So I know I have a trade. I looked at my stats, it's 93% wins. I'm taking this trade. So by 3 p.m., I'm trying to get my trade placed. 3 p.m. Pacific. Later is okay too, but you try to get there as early as possible. So you don't want to miss any opportunities for a fast moving market sometimes. All right, so I'm going to enter the trade on a buy stop. A buy stop means I'm not going to enter this trade unless the price goes above a certain amount. So the market has to be actually going higher for me to get into this trade long. I'm not going to buy when the market opens. I'm going to buy when the market goes above a certain value. That's a buy stop. So I need the market to prove itself to be doing what I expect it to be doing. Right? So the high this day is 4371.5, and you can take a look at the numbers on the data box also. So the date hooked up, the market's now closed, it's after 2 p.m. I get my data update, and this is what I'm going to see. I'm going to see the orange line hooked up. Hey, I looked at that. Hey, it hooked up there. Okay, let me check my stats. Let me check everything. And I'm saying I have a valid trade. All right. So the high that day is 4371.5. So what I'm going to do, my entry price is 2 points above that, 2 S&P points above that. So I'm getting in at 4373.5. So what I do, I'm going to have the first part of my order is going to be an entry. And when that entry is filled, then it will automatically trigger my target and stop loss. So I don't sit in front of the computer looking at stuff to get in and out of positions. That is stuff people do when they're beginners. That's stuff people do when they're starting out because they don't know any better. So they sit in front of a computer all day long, trying to get in and out of positions, trying to find trades. But like any business, the longer you are in it, you advance, hopefully, and you suddenly find yourself literally doing less work and making more money. And that's what we did in trading. We started out day trading, sitting there for hours and hours every day. And what we eventually found out or realized is that we can make the exact same amount of money or lose the exact same amount of money by placing 1 or 2 swing trades, which is the financial equivalent of sitting there for hours and hours and hours every day. But just that the people we had learned from initially were day traders. So that's what we thought we had to do. As time went on, we met other people who were swing traders, and it was like the lights went on, like, finally. And we learned from those people. We don't have to be day trading. We swing trade only. So let's go through this some more. Okay, so now 2 points above is 4373.5. So I know I'm going to go with one contract right now. I'm going to buy one contract, one micro contract, or at least enter, and we'll determine how many contracts, but in a little bit also depending on risk. One micro contract at 4373.5. My stop loss will be 2 points below the low of the previous day. The low of the previous day is 4310. So my stop loss will be at 4308. Okay. So my entry is 4373.5 and my stop loss is at 4308. Okay. The difference in that, the difference between the entry and the stop loss is 65.5 points. So 65.5 S&P points is the difference. Okay. So if we were trading the E-mini contract, 65.5 points would be 65.5 times $50, which would be about $3,270. So if I took a loss on one contract in the E-mini S&P, I'd be losing $3,270. That would be with the full size E-mini. Okay. But we are trading the micro. Everything is 1/10 the size. If we take a loss on one micro contract, we would lose $327.50. That is our risk on the trade on one contract. Okay. If the risk is $327 on one contract, and we wanted to have our risk at $1,000 per trade, how many contracts of this S&P could I get? Anybody? If my max risk is $1,000 and if I take a loss on one is 327, how many contracts can I get? Thank you, Gloria. Correct. Yep. It's that straightforward. And believe it or not, most people would never have even calculated that. Okay. People just sort of wing it. They're going to get 10 contracts. What? And they have disproportionate risk. It is really important to have the same approximate dollar risk on every single trade you place. You don't want to risk 500 on one trade, 1,500 on another trade, 2,000 on another one, 3,000 on another one, 900 another, because you have no expectations. If you take a loss on the one you're risking 2,000 on, you cannot offset that loss with a trade you're risking 800 on or something. It doesn't work. But if you approach this in a very business-like manner, where you have the same approximate risk on every trade, then you can have a very predictable income level, very predictable income. Okay, so I got a question. Do you ever make your stop and reduce your contract size? Your stop is your stop. So Chris, your stop is your stop. Your entry is your entry. Your stop can never ever change. Your entry can never ever change. You adjust the number of contracts to determine your dollar risk. We know based upon this entry and this stop loss, we know we're going to have an 90-something% probability that the first target is going to be reached. And we're going to go over the first target in just a moment. So that doesn't change. All what changes is the number of contracts you trade. So if you want to risk only $500 a trade, that means you can only get one contract because it's $300 and something risk for one contract. If you want to risk $700 something per trade, then you can get two contracts because that's 327 plus 327. So if you took a full loss on two contracts, it'd be just under $700 or seven something. So it is determined by the number of contracts and the size of the stop loss. So there are sometimes your stop loss might be $400 a contract. It might be $500 a contract. It might be two something per contract, depending on how big the stop loss is. And you just adjust the number of contracts. But usually for most of the trades, your low end risk is about 500 and 1200 can get you into most trades realistically. Even the Nasdaq was a little bit bigger, but between 500 and 1200 is going to be your risk on most trades. So if you want to only risk $500 per trade, that's very workable and doable with these strategies, trading the micros. All right, so now we know our risk is 327 per contract, and we know how to get the number of contracts to equate out to our dollar risk. Now, our first profit target. We provide stats in the trading plan usually for if you want, when we look for when the position is up 40%, 45%, or 50%. So basically, if you are risking $1,000 based on your stop loss, when the whole position is up $400, that's 40%. That is when we take a profit by either exiting the whole position, locking our 40% return, or we take part of the trade off and move stop losses up on the remaining contracts. So let me show you how we're going to do that. So we know our stop loss was 65.5 points. That's between 65.5 points was between the entry and the stop loss. There's 65.5 points. 40% of 65.5 is 26. 40% of that range between the entry, which is above the high, and the stop loss, which is above this low, below this low, is 65.5 points. 40% of that distance is 26 points. That is the size of our first profit objective. Okay, so we place an order to buy stop when the S&P goes above 4373.5. So that's the first part of the order. That happens if sometime the very next day. We just place the order and walk away. Sometimes the very next day, that it goes higher and the market is filled. The moment that order is filled, it triggers automatically the first profit objective and the stop loss. So the first profit objective will be a limit order that says when the S&P reaches 26 points above the entry, that's 4373.5 plus 26 is 4399.5. So when the S&P reaches 4399.5, which is right about here, the very next day, fill my order and sell my contracts. And the second part of the order would have been it would put the stop loss in. So the first order is the entry. Until that entry is actually filled, there is no target and stop loss, but as soon as the entry is filled, it automatically places the order for me for the first target and the stop loss. And that should all be done in one trade order. And then you walk away and go live your life. There is nothing to do. There's nothing to look at. There's no sitting in front of the computer. Okay. At the first target, that is 26 points. That's 26 times 5. So 26 times 5 is what, Becky? Or anyone? 26 times 5. Anyone? 26 times 5. Type it in. 130. I got 130 and I got 139. Is it 130, I think? Okay, 130. All right, so at our first profit target on one contract, we're going to make $130 because it was 26 points. Our total risk, our initial risk, if everything went horribly wrong, was, let's say we got one contract, and our total risk, if everything went horribly wrong, it becomes a full loss, was $327. Okay, 40% of that is 130. Okay, every trade we do, the first profit objective will be between 40 and 50 something percent return on our dollar risk. So if we're risking $1,000, we would have made 400. If we're risking $2,000, we make 800 at the first target. That's just the first target. If you want more, then you have to do some more work and trail the stops. So you sell part of your position at the first target and then trail your stops in the remaining contracts. I just went through a whole lot of information, which takes me several hours working with people one-on-one to really get in and okay, and get down and do examples and so on and so forth. Do we have any questions so far? Anything at all whatsoever? I want to use this example to clear up any questions. Feel free to unmute and ask anything also.
Eversley, I have a question.
Yep.
Lee Horseman.
Hey.
If you reach, say you have 2 contracts on, and you reach the target 1, and target 2 has not been reached when the particular future you have reaches expiry.
Yep.
Do you roll to the next future and adjust your stop loss? How do you handle a situation where
Let me make sure I got what you said right. Target 1 was reached.
Right.
You now have your stop loss and second target in place.
Right.
For the second half.
Right.
But the contract is expiring.
Right.
You have to roll it on rollover Thursday. On
yes,
rollover Thursday in one order, you just roll it to close the current contract and at market value and open the next contract at market value and then put back in the same targets and stops you had before.
The same target. Well, you might have to pay more or less for the future.
It is not, you're not really paying more or less. It is, that's on the charts only. It's not a real profit or loss. The numbers might be different.
Right.
Right. See, that you're actually getting out at market, in at market. You're not
right.
going from, it's just the numbering is different, so it's confusing. But whatever profit you had in the initial contract, when you close it, you're going to lock in that profit, right?
Right.
Whatever loss you might have had in the initial contract, when you close it, you're going to lock in that loss, right?
Right. Well, you're out of the trade in that situation.
Yeah, but this is the roll. So in the roll, you have to close one, open the next one.
Right.
When you close one at market, you open the next one at market.
Right.
So it has a new starting point. So it's the number is different, but you're not making or losing money. You're just starting at a different number.
I understand that part, but what I don't understand is what I do with the stop loss
Exact same values. You put back in the exact same values.
as you had initially.
Yes. Exact same values. Yes, it may be kind of weird because you might have thought you might have so many points to go until, so yeah, there might be a few points different. But that's not a big deal. It's just the way this is what we have to deal with some futures.
Okay.
That, yeah, you may not get all the profit you thought you were going to get at the first target, or you might end up getting more. See what I mean?
Right.
But yeah, you just put it back in the exact same target and stop. I actually went through that to make sure, because the charts on NinjaTrader, they roll over on Thursday. So on Thursday, they start showing after the close on Thursday, they will show the new contract value. After the close and rollover Thursday, it will show the new contract value.
Thank you.
So that's why you see on the trading plans, we do not take any new trades at the end of rollover week, and no new trades at the end of quadruple witching week. Because of that exact reason, the charts have a little, fluctuation there, So we can't trust those numbers during those days because of those gaps as the contracts change over. So that's why we don't take trades during those times. All righty. I got, how is the momentum computed? The momentum probability score you mentioned. I don't know which, David, I don't know what momentum you are referring to. Which momentum are you referring to?
The one in the on the left panel, blue, light blue. It's at 76.8.
Okay, that is part of the squeeze indicator. We don't calculate that. That's part of an indicator. That squeeze indicator is a combination of Keltner channel, Bollinger Bands, and momentum, and that's all been combined into one indicator. There are multiple videos online that you can research the squeeze indicator. If you email me later, I will send you a direct link to the one I think is best, because that one was created specifically by John Carter, who is the creator of the squeeze. He made a new video on the squeeze and how it's been created and how it functions.
Okay, that sounds good. Also, you mentioned the probability a couple of times.
Yeah.
Is that showing on the screen? Or
no, that the probability is something that Becky spends hours and hours every month reviewing all trades and going through and determining how many wins and losses there are in the history of everything we do. That's how we determine the probabilities. Since the inception of the Dow, S&P, Nasdaq, currency futures, ETFs, gold, whatever it might be, home builders, since day one, how many wins have there been? How many losses have there been given the specific trade management we're using?
Okay, and so that's something that we will have access to?
Yeah, that's the foundation of really what we do is the stats. I want to switch screens right here real quick, because you may not have seen this before. Okay, share the screen, you share ETF stats. Okay, this is an example, trimmed down example. The folks who are doing the futures right now with me will recognize this. This is actually numbers from the T-hook. But as an example, we'll have stats for the first target, and given a stop loss of different sizes, we expect 85% wins. As using S&P as an example for a particular strategy, which is a T-hook. Not the one we're looking at. This is not the one we're looking at right now. This is a different future strategy. If we look at the first target with this size stop, we expect 85% wins. This 2.45 and 2.68, what this represent is dollars made versus dollars lost. This is saying, if I do this strategy, I expect to make $2.45 for every $1 I lose. at the first target. That's just at the first target. So if I do nothing but place my trade and exit the whole position of the first target, that's my expected returns when I'm trading S&P with this strategy at the first target. If I use a different stop loss, it's still 85% wins, but my profitability goes from $2.45 to $2.68 made for every $1 lost. So we use this to determine, kind of like 2.0 is kind of our low end. Some people will go less. I'll go less at times depending on what I'm trading and what I'm trading it. Like I know here, the Dow gives us our best returns and our highest probability of success. So when I see the Dow become valid with this strategy, I'm getting in on this. Okay, this pays out the best. And once again, target one, I'll tell you right now, is going to produce a 42% return. And target two is going to be approximately a 50-something% return. There's two different targets, not target two, but different sized first target. So target one is a certain size, and I have stats for target two being a bigger size. So for the bigger size target, it's actually a 50-something% return. But this is how we do everything. And Becky updates this every week, every month. And we send this out to all the people I'm coaching every 3 to 4 months, because this is what's needed. This is the foundation of what we do. We need the numbers. This is business. We don't just wing it. We don't think, well, this looks good. What does good mean? You know, define good. What's, you know, no, we need to know numbers. There's a very fine line between making money and not making money in trading. I know a lot of people, they make a lot of money. They make a lot of money trading. Then they lose a lot of money trading because they don't fully understand, or no one ever told them to expect 3 to 4 losses in a row. No one ever told us that ever until we started working with people who trade their own real money, their own personal money, not just educators. So we don't risk more than about 2% account per trade. And when we're risking 2% of the account per trade at 80-something% wins, the numbers just work out very nicely. And I'll go through that in just a few minutes with an actual numbers so you fully understand it. Does that kind of?
Yeah, that helps. Thanks. Yeah, that helps. Thanks.
Okay. Just so you know, anything you see in a box, in a spreadsheet, Becky does all the spreadsheets. I do not put stuff into little boxes. She tracks everything. So we work together really well. She doesn't want to be the one talking here. I like to do the talking and the presentations. I hate putting stuff in spreadsheets and documenting anything. She does all the documentation and tracks all the information, all the numbers, and we've been doing it for a long time. So we work together really well. Helps to work with other people. That's why we have our Facebook group now for the traders. It helps to be around other people in some way to because doing this by yourself kind of sucks actually. So I'm going to go back to the chart. So yeah, it helps me working with other people a lot. Okay, so that is the general concept for the double D hook. And I'm going to put up another one, Nasdaq. Let's take a look at a different setup here. I'm going to be pulling up a spreadsheet in a little bit, and I'm going to show you some different trades. But here we wouldn't have a trade because it's a down day. The market closed lower than it opened. So per the stats, take a look at the plan, it says its signal day must be an update, and the trigger is not an update, it's a down day. It closed lower. This hook here, this wouldn't fill, has to be filled within 2 days, so no trade. So we have no trades here with the double D hook, okay, nothing. But we have a nice big up move here, and you think, wow, we're going to be missing that trade. That's why we trade more than one strategy. You can't find every trade on everything trading one strategy, okay? I'm going to change this up now. Templar load, TNT 47. All right, same chart, totally different look, different strategy. All right, it's called, we're going about TNT strategies, the trend line strategy. The thing with trend lines is no two people are going to draw their trend line in the same location. Until now, all right, myself and Becky, we figured this out a long time ago. We have, way back when, 2006, we purchased software that cost like $3,000, and that software will tell us where to draw trend lines on 3 different time frames. And we still have that software, but we eventually figured out ways to do that objectively, such that any trend line which I draw, Becky's going to draw the exact same trend line. Jason is going to draw the exact same trend line. Lee is going to draw the exact same trend line because it's rules based. Okay. The same way we did not have a valid trade that we could take on the double D hook on this chart. All right, here's our trade. There to there. That blue point right there, that inverted V, to this blue inverted V, we are drawing the trend line right across, and it closed above on 1014. Buy stop. I've been in all these trades. Okay, that's the trade. Very nice trade. October has been beautiful trading. There's a seasonal pattern long in October, and we are in it. And it's just been perfectly timed. I'm going to switch this real quick to the Nasdaq and keep these trades in mind because they're going to come up again a little bit when I pull up the spreadsheet. We got multiple trades here. One trade right here on 1013. Another one right there. Inverted blue V, inverted blue V. Together, you draw the line. When it closes above that line, that's your trade. Inverted blue V, inverted blue V. When it closes, you draw the line between them. When it closes above, that's your trade. Now, I told you that at the first target, it's a 42% return, approximately. So I was in this trade, multiple contracts. I got out of this trade Friday is when I got out of this trade, okay? At the first target, my whole position, going with just the micro contracts, my whole position was up 42% at the first target. So let's say I'm risking $1,000 per trade just to make it easy. At the first target, the whole position is up 420 per contract, or 420 if you're just gonna hold. So I sold half my position. That's money in my pocket, okay? But that would mean that I'm still in this, and I just kept trailing my stop on the remaining contracts, okay? I got out of this on Friday. On the remaining contracts, remember let's say my initial risk was $1,000 for the whole trade. Okay, and I'm trading, let's say I'm trading 2 contracts. Let's say to make it easy, I'm trading 2 contracts, $1,000 risk. I won't say how many contracts I was actually trading, but trading 2 contracts for this example. On Friday, my second contracts were up $1,200 profit for each contract. Okay, the initial move was ATR 246, so it's about 100 and Becky, what is 246 times 40% of 246? So what's 40% of 246? Am I missing data? There it is. So 40% of 246 is what? $98, sounds about right. And the Nasdaq is $2 a point, okay? So on my first target, I made $196 per contract on my first target. $2.98. So my first target was 98 points for my first target. First target hit the first day, and I'm up $196 per contract. So my first contract, which I sold, is worth $196 per contract into my pocket. Up here, I'm still in the trade with the remaining contracts. Down here at the first target, each contract was worth $196. Up here, each contract was worth, this is actually Friday. Up here, each contract was worth $1,200. Okay, so my 42% return was actually 100 and something percent return on the whole trade because I trailed my stop. It wasn't just the Nasdaq, I also was trailing the stop on the S&P and also on the Canadian dollar trade. So I'll be showing you, the lowest percentage possible at the low end, but the reality is if you trail your stop, your 42% can easily become 50, 60, 70, 80, 90, 100 and something percent return. And these trades like this happen several times per year. Okay. Now, any questions so far on anything? Because I want to get into numbers now. I really want you to understand how we trade, but this is how we trade. And remember these two dates on 10/13 and 10/14 because they're going to be in a different listing. All right, let's go to the spreadsheet. I want you to show you profit and loss now. Okay. I'm going to change the share. Where is it? Futures. Futures October down, futures stats, data box, control. Here's my daily. Here it is. 1 second. Searching for it.
Hey, Eversley.
Yep.
So you've drawn two different trend lines based off of two different trends. Could
Yes.
those been two separate trades?
Two separate trades.
All right, great.
And
Thank you.
there are times when you're going to have 2, 3 trades on the same symbol. And it's up to you to take all 2 or 3 trades. All right, let's go through this. I asked Becky to put together this to show all the futures trades valid over the last couple of years and how the numbers add up, just doing the futures trades, nothing else. So what this spreadsheet is based on, which I had to put together, is based on a $50,000 account and only risking 2% of the account per trade, or $1,000. So this is a $1,000 risk per trade. I want you to understand how the numbers add up if you're consistent with your trading. If you wanted to do a higher percentage or higher dollar amount, just multiply it accordingly. But this is $1,000 risk per trade, absolute worst case scenario, exiting the entire position at the first target, no trailing stops, worst case scenario. Okay, started in 2019. And these are the trades for January with the different strategies between the index futures and currency futures. All right. And the lowest potential profit is a 40% return. That's the low end. Okay. So if you see 46, it means it's a 46% return. All right. So I'm risking $1,000 a trade. So we had a bunch of trade wins here and 1 loss. The net return for the month is a 5% return. That's 5% on a 50 grand account. Okay. The next month, February, we only had 3 trades, small loss. Remember, we're just trading futures here. This is not day trading. You don't get 10, 20 trades a day, a week. That doesn't work like that. This is trading more at an experienced professional level. You wait for your valid trade setup, put your trade on, go live your life. Nothing to do. March, 5% return, book $2,600. If you wanted to do $2,000 risk for trade, this would be $5,000 something, okay? Next month, we only had 2 trades that month. That's our profit. Next month, and so on and so forth. June, we had a lot of trades in June. 3,400, 6.8% return. So on and so forth. Small loss in August. August is usually kind of sketchy. September, good month. Small loss in October. Okay, we had December now. End of December. Makes it a little bit wider. Okay, December. Here are the totals for the year. 15,870 made for the year. That's with all wins and losses at first target only. And with a 31% return on the account. That's doing nothing but trading, taking our futures trades without being overwhelmed with trade. You can trade it in anything you want. You can trade it in micros. It's just, if you have a big, this could be $1,000, this could be $5,000, this could be $10,000 a trade, this could be $100,000 a trade. You just trade the size, whether you trade the E-minis or the micros, you trade whatever you want, depending on your size account. You have a smaller account, you're gonna be trading micros. You got a huge mega dollar account, you're gonna be trading the E-minis. It's all the same. That does not matter. Just size depending on how big your account is. All right, so that's a 31% return for 2019, just trading the future strategies. You might be trading options and other things too. That's great. If you were trading $2,000 risk per trade, this is $30,000. If you're trading $4,000 risk per trade, this is $60,000. Getting a feel for how the numbers add up. Okay, 2020. All right, January. February, very nice month in February, 10% return for the month of February. March. Remember, this was when the market got destroyed last year. Remember when the market dropped and dropped and dropped? Okay, so we don't take a bunch of losses. Market's going up, we make money. Market's going down, we make money. When everyone was screaming last year, when the market pulled back massively, right at the beginning of the pandemic, when the things were getting shut down, that's when the market dropped massively. Those were our best months trading. Those were our best trading months last year, just following the strategy. These are all short strategies. This is just the first target. These kept dropping, okay, for multiple targets getting hit. These kept dropping. So here is March, a perfect month of March, no losses. And this, once again, look back at the chart, this is when the market got crushed. But when we are trading objectively, repeatable rules, we don't get into all that stuff being caught up on TV and stuff, and the people in the news trying to panic you, you know, and the stuff. It's like, don't get caught up in that nonsense. The charts tell you what to do. The charts don't lie to you. As long as you have a plan to execute. All right, so we're going through. Now we're up to April, May. We got a few losses in June. Slight, so we got a little bit negative, minus 4.5, big deal. Now, here's what freaks people out. Let's say you started trading these strategies with me in June, and this is how you started. This is what makes people stop. They'll be like, I don't know why I wasted my money with you. Why did I get you as a coach? You lost all my money. I did everything you told me to do. I lost all my money. And you won't believe the calls I get, but that's what happens. People freak out. People will like, they lose confidence. And it's my job to basically get you to place the next trade and keep going, because you have to trust the methodology. And this is why I put this together, to give you an example of this happens. So when you see, you got to know this can happen. You can have 3 or 4 losses in a row. It's normal. It happens. Okay, so you got to plan ahead for that to happen and expect it. It's a big deal. Just move on and things resume. Back to your winning ways and more winning ways, and more winning ways. And it just keeps going and going and going. Now we're at the end of 2020. Looks like we had no new trades in December. We finished the year with a 55% return on the account. Okay. If you were risking $2,000 per trade, this would be $54,000. If you're risking, so, you know, just keep multiplying, risking $3,000, that'd be 70-something thousand dollars. It is that easy. Is it that easy? Yes, it is. It actually is that easy. But you have to be consistent with it and treat it seriously like a business. This only takes 30 to 60 something minutes a day to do this, or sometimes less. If there are no trades valid that day, less. But you got to do it every day, 30 to 60 something minutes. There's no shortcuts. You have to sit there. It's not hard, but it's work. It's a job. It's a job that way you can work 6 to 10 hours a week or less usually and make a very nice living. Okay. Okay, 2021. Good January. Really, really, really nice February. No losses. Couple of losses, couple of wins in March. But note, if you have disproportional risk, the numbers will not work out. What if you're risking 2,000 here and 1,000 there and 800 there and 4,000? That doesn't work. Same, approximately, not exact, of course, but approximately the same dollar risk on every trade. Then you can have predictable income like this. This is an example of a business-like approach. This is what I do, how I trade, a predictable business-like approach, and then you can know what to expect and actually make yourself a budget. You're trading a 50 grand account, risking $1,000 a trade. I expect to make a 30 to 50% annual return. That's it. It's easy. It's straightforward. It happens every year, unless you really just mess up or miss a lot of trades. Keeps going. April, perfect May. So basically, just in the last almost 2 years now, since last year, March, my only real income has been trading. I have multiple businesses, multiple things I'm involved in, but they all got shut down last year. Trading was my only steady income. So you're looking at how I made money since March of 2020. This is it. This is my only real income. Nothing else. You know, this has been my job every week. Going on. June, July, all profitable. August, September, and we're into the month of October. Here we are as of October 14th. And we're up 57% for the year, just up to now. Okay. This is why we really, really like futures. This is why we traded futures before very successfully. We only stopped for a while because of the margin, but now that we have the micros available to us, we're back. This is the best trading. I love trading futures because the money just adds up so quickly, so quickly. Do you have any questions so far on anything? Could be anything you want, just ask, throw it out there on the charts, on the profitability. And the strategy, we'll be recording the strategy. Usually the detailed details we go out to the people I'm coaching.
This is Ken. Can you hear me?
I can.
Question I got is when you were drawing on the trend lines, and someone asked earlier about
switch back.
drawing 2 trend lines.
Yeah.
My question was, how far back can you go to draw those trend lines?
Okay. Remember, on the trading plan, it says there can only be a max of 2 months in between touch points and only a max of 2 points going forward. 2 months.
Okay.
Remember the touch and form the inverted V. Look to the left. Find the previous one. The look to the left works, right?
Yeah.
Exactly. So Ken is someone who I work with in person. He's one of my in-person people. There are people who like to work in person. I like in person, and we can do that again now. Last year it was tough. Like we didn't have a place to actually work, but now we can meet in person. I usually meet people in Santa Clara University most often, but we can do it in person or via Zoom. But yeah, it's just it makes a move all the way down, comes up, forms the inverted V. once you see the inverted V, then we look to the left for the previous one, draw the line, and then look for up when it closes above. That's it. That's our trade. That's our trade.
Thank you.
Yep. So it works out really. There's some nice trades going on. And those trades you saw would be on a spreadsheet also for the month of October. They're all there. What software do you use for charts? Okay. Yeah, we use NinjaTrader for all of our charting. It's free to use, and I can basically hand you all of the charts, all of the indicators ready to go, and it's easy. So the charting doesn't have to be moving. It's not live. It's end of day data, and our analysis is no more difficult than what we just did. There are 7 index future strategies. We might be adding another one soon, a short one, and several currency future strategies. I'll go through. Any more questions on the strategies? What are the charts indicating for the next few weeks? The charts only indicate what's valid as of today. And right now, seasonally, we are long. Seasonally, we got our first buy signals, and we've capitalized on that. We have on the options and ETFs, we have multiple longs still going on, but those longs are right through December. So right now, based upon seasonal historical patterns, the longs are in play, and that is through December expiration. Longs are in play. Doesn't mean the markets won't pull back along the way, but overall, for the longer view, we trade options for the bigger picture, longer trades. For the shorter term moves, we do that with futures. So we capitalize on the shorter term moves with futures. We capitalize on the longer term plays with options. Because with the options, we don't need a hard stop. With the futures, we have to have a stop. So we don't want to get stopped out, then it goes up. So we do that with the options. So what I've been doing over the last, as I've evolved, my option trades now focus on oil, gas, gold, energy, metals, silver. That's where my option trades are, and my futures trades is for the general market, that direction, long and short. So I kind of diversify like that. So I have my option trades for certain things and my futures trades for everything else. Right. So I'm going to switch over to the handout. So if anyone has an interest for the futures coaching program, what I'm doing is everything is one-on-one. There's no group anything. So we adapt to what your personal needs and schedules are and work with you as needed whenever you're available. So we coordinate that. Usually 1 to 2 hour sessions. And what I'm charging is $17.45. And that is for 7 index future strategies. We kind of preview 2 of them. One is with the trend lines, 100% objective way to draw them. The other one is the hooks. And then 5 other index future strategies, which all combine to what you see in the spreadsheet with the profit and loss, along with the currency futures. So we have several currency futures strategies. There's more index futures trades, but we also have 3 currency futures trades strategies that all contribute to that spreadsheet and those dollar amount profit and loss. Like I said, those are low and worst case scenarios at a first target only. You want to make more money, you got to trail the stop, do a little bit more work. But I will basically work with you one-on-one. I will hold your hand if needed. If you've never traded futures before, I will help you get the broker's account set up, whatever's needed. I will review your trades with you in detail. I will literally go through your order form with you, make sure everything is filled out correctly. Like I said, you don't want to make mistakes on futures. Futures are super profitable, but it can also rip your account apart really fast and mess you up if you do stuff wrong. So you don't want to make mistakes on futures. And when you do make a mistake on futures, you correct it fast. If your mistake has cost you $100, you close the position out, take your $100 loss, and then go again. You don't mess around with futures. They're really great to trade, but it's a very professional product. And if we treat them right, they'll be very good for us. but you got to really do things the way I tell you to do it. And here's one rule: you do not have you do not have a futures contract open and without a stop loss. There has to be a stop loss for every single futures contract. There's a gentleman who I did a workshop with years and years ago, and he was coaching clients. And he said, as a rule, he would tell his clients, if he finds out that they are trading futures that don't have a stop loss attached to it, he will drop them as a client. It wasn't until later on I understood why he did that, because that you can't have people trading futures without a stop loss. You just can't do it. It will eventually, it's just killing time until the market moves makes some weird move overnight for whatever reason, and you get a margin call. Your account's gone and you owe money. So no futures trades without a stop loss. Serious risk management there. And just by controlling your losses and managing your wins, profitability just happens. It's a nice thing. But anyway, this is all one-on-one coaching, either in person. If you want to do the options and futures, is a combined deal, $34.95. And anyone who wants to do the combined version, I will take $500 off of this amount for $29.95. So if anyone wants to do the combined futures and options, let me know. I will do that combined. I'll take $500 off. Otherwise, futures only, $17.45, and we start working right away. The best trades, the best trends happen right now to the end of the year. Whether it's up or down, the best trends happen now and right through April also. So good time to get going. I got a question on whether charts indicating for the next direction. Oil energy. The oil energy stuff is all going to be ETFs and options. We're not looking at ETFs today. We will be doing our last last meetup for the year is going to be on November 14th. That will be on options and ETFs. For option trading, Gordon, for option trading, October through April is when the market trends. Is the same for the futures? Yes and no. With the futures, we can get smaller movements and get bigger returns. So for the options, we need much bigger movements to get those nice big returns on the options. For the futures market, we can get a bit much smaller trend and get a same 3 times as big a return for the futures. Generally speaking, the answer is yes, but trading them is different, because you want a bigger move, there'll be more swings up and down that we catch with the options. The smaller moves that give us big returns that we catch with the futures. But generally speaking, yes, Gordon, but we got to capture the profits differently. We can't capture the same profits with the futures as we do with the options. So when they work together, it's a nice thing. Okay. So if anyone has an interest in coaching, let me know. Email me. My email address is on the document. It's on the website. I have a contact form on the website. Let me go to the website to show you what's there also. Some things you can check out. Let's see, I'm going to change the share to the website. Futures October, Street Small. Okay, so on the website, we got all the trade listings. So update this every month. Becky goes through and updates all the trades that have been valid for the last couple of weeks, and we put them here. Contact form, easy way to get in touch with me off the website or email me. So you can just fill the form out. I get that pretty right away, and then I can contact you back, set up a time to chat, go through what your specific situation is, and we talk through. Some people contact me with very unrealistic expectations. And what I mean by that, here's one of the first questions I ask them. If you have $100,000 account, how much do you expect to make in 1 year? What percentage return? And I've had people tell me $500,000. They'll tell you, it's like, sorry, you are not living in a world of reality here with expectations. if someone told you that you're gonna make 5 times your money in 1 year trading and be able to do that all the time, then someone lied to you. That's not realistic. If you expect to make anywhere from a 10 to 40-something% annual return on your money, 10%, you can do that, no problem. 10 to 20%, no problem. 20 to 40% return, if you don't make too many mistakes and follow the plan, yes. Over 40%, very doable. With futures, you can do that with futures. Options, kind of sketchy. But yes, if you have 100 grand account and you want to pull down 40, 50 grand a year from that in profits, that's pretty doable. That's actually pretty doable. But it's very rules-based, following the rules. That's very doable. Just like I showed you on the spreadsheet. That's only a 50 grand account and between 3 and 10 to 12 trades a month. And that's pulling down a 50% return. So it's a matter of consistency and following the rules of risk management. Smart risk management. And here are the coaching program details. Same thing we talked about for the futures. And it's all here also on the website. And like I said, I work with people one-on-one, and I can work with you on mornings, afternoons, and some evenings. Quite often on weekends, on Sundays, I do not work on Saturdays. Saturdays is my day. I train in Brazilian Jiu-Jitsu on Saturdays. So Saturday is my day to train. And all right. Do you have any, here's a question. Do you have any Discord channel for sharing trade ideas? We have the Facebook page. I'll go to the Facebook page. Should be on the site now. So this is where we have the Facebook page for the futures. What's happening in the futures deals. And we have the page for options, the options group place. So we list trade candidates which are valid each day. All right, so each evening I list on the page what's valid for the day. So people come here and they can go through. There's the weekly one with on the weekly. We also have trade shares, what's on the valid for the weekly chart, shares, the daily chart. All right, so this is the Facebook page. So if you want to have discussions here, you can. So if you're doing training with me, you have access to the Facebook groups, the futures and or the options one. And you can have whatever discussion you want to have. But if you want to share ideas, you want to discuss something, that's free, you're free to do that, no problem. Just keep it kind of civil. But yeah, you're free to do that and share whatever ideas you want to share. And I'm sure there'll be someone who will engage with you. Do you have any questions, anything whatsoever? So you give you a good idea for how we trade, what we trade with futures. And on November 14th, I'll be doing the option presentation. And there's some videos online that you might have seen that has a similar approach to get a feel for that also. But if you have an interest in coaching, this is a good time to start. While we love volatility, if you hear anything about markets going up, we live for that. Like I showed you from last year in February and March, and those were our best trading months. When the market goes crazy, when things start moving up and down, that is what we want. That is when the markets move. That is when we make money. We don't make money when the market's blah, 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 blah. We don't know. We want it moving. We don't care if it's moving up or moving down, but we want the markets moving. And that's when we make the biggest profits. And by following a plan, you don't get scared. You like, this is all after the market closes. There's nothing wiggling around the chart. You just place your order after the market's closed. You do your review, place your order, walk away. And it sounds easy, and it actually is easy. It takes maybe a couple of weeks just to get the fine tuning things down. Jason, are you out there? Are you willing to make some commentary since you've been doing this for a couple of weeks now? What are your thoughts?
I like it. I think I was coming from trading options on a daily basis and actually doing day trading futures, and I just wanted something to spend less time. So I like the idea of spending less time swing trading futures, and the trading plan is straightforward. And after spending time with Eversley, I think I've got my sea legs and confident to continue to make some profitable trades.
Cool. Yeah, Jason started a couple of weeks ago and it's been going well. And like I said, I meet with you as needed. Whatever questions you have, I'm very available by email, by phone. You want to do a Zoom meeting, I'm readily available. So because some stuff has to be dealt with in real time. Okay, trade's valid. What are we doing? Or you think something's going wrong? Got to deal with it. You just literally pick the phone up and give me a call, and I'm there, no problem. But best way to reach me is to email me. I check email all the time. And if you need, or you can text me. Most people don't have my cell phone. I only give my cell phone to certain people, but email me and I'll be in touch with you very quickly. All right, I'm gonna go ahead and wrap it up for now. November 14th, Sunday, we're gonna do an option meetup. Go through one of our favorite strategies. It might be one of a different favorite strategy than the one you're thinking of. I'll see. So some of you have been here with me for a while. And like I said, if you want to talk to me about coaching, I'd like to talk to you first about what your goal is. I do want to make sure we are on the same page and have realistic expectations, and that what you want to accomplish is in line with what I can show you how to do. So we set up a time to chat and then kind of go from there. All right, unless we have any questions, I'm going to go ahead and wrap it up, and then we'll meet up again next month on the 14th. All right, you're shutting it down now. Sandra, you're gonna be getting back into it?